Welcome to the Infrastructure Podcast. My name is Anthony Oliver, and today we're diving into the rapidly evolving world of infrastructure investment, a space that has moved from the periphery of specialist portfolios to the centre of global capital markets. Once a preserve of a relatively narrow group of pension funds and specialist investors, infrastructure has now become a truly universal asset class, attracting sovereign wealth funds, institutional investors, private equity houses and retail capital. And it's an asset class that promises stable, long-term returns while underpinning the physical and digital systems that our economies depend upon. Well, joining me today to help us understand why we're seeing these huge and profound changes, and of course why they matter, is Charlotte Madden, partner and co-head of the infrastructure sector at global law firm Clifford Chance. Charlotte specialises in advising private equity and infrastructure funds on complex domestic and cross-border M&A, often involving highly regulated transactions, and she's helped to deliver the deals that make critical infrastructure happen, from the earliest structuring stages through to completion. And in the UK, the stakes really couldn't be higher. The government has set out an ambitious £725 billion infrastructure pipeline, with more than half of that expected to come from the private sector, from energy security and clean transport to housing and digital connectivity. These projects are central to national growth plans, yet the tension between private investment and public service delivery remains a live and often polarising debate. It's a complex subject, so let's dig in. Charlotte, welcome to the Infrastructure Podcast.
Brilliant. Thanks so much, Anthony. Thank you very much for having me. I'm very much looking forward to our discussion today, and it is a real privilege to be part of this dialogue.
Great stuff. Well, I mentioned the changes that have swept across the investment market, in which we're seeing infrastructure, I say, once a niche investment going mainstream. Did I get that right? How would you describe the current global appetite for infrastructure as an asset class?
I think if we look at what we've seen infrastructure do in the past 10 years, we've really seen it kind of moving out of its nascency and much more into a mature asset class. And what is infrastructure is ever broadening. So I guess in short, the appetite is strong and it's really under the spotlight. And not only have we seen it evolve as an asset class, but I actually think the conversation has evolved into the mainstream. So of course, kind of with governments talking about public, private investment, but also where you see the likes of Larry Fink providing mainstream commentary on it, it's really sort of, at the fore of conversation now.
Right. As I say, global capital is increasingly also being aligned. It's underpinning, what the government wants to do from a policy perspective. Do you think infrastructure's mainstreaming has fundamentally changed how deals are structured and valued?
I think when you talk about the time of infrastructure mainstreaming, concurrently as we look at it, there's been quite a significant shift or maybe growth of national policies. So the world has changed. And so, yes, of course, infrastructure has evolved with that, and so has deal doing. I think if we think about the evolution of infrastructure from the early days when you were thinking about, regulated utilities, transport, hospitals, a significant part of it was around project finance and development as well as operation of those assets. Those conversations and types of assets are still super relevant today, and we're seeing a bit of a renaissance with some of them, like infrastructure, from a social perspective as well as airports. But actually, the infrastructure discussion has evolved much more to align capital with climate targets, digital transformation we've seen, and energy transition. So it's evolved as the national priorities have done so. How does that manifest itself in deals? So we are seeing, ESG-linked performance metrics, longer-term risk-sharing arrangements, blended finance models that are creating, pretty robust but complex capital structures. And then ultimately kind of valuations and where deals are going with that. Investor appetite is clearly driven by strategic relevance, macro trends more broadly. So clean energy, digital infrastructure, there's been a huge amount of investment into that. If you look at data centers, electrification, so the valuations around those types of assets are incredibly healthy. So it all feels very relevant to the topic.
Yeah. And of course, the UK government specifically is really getting behind infrastructure as this driver for growth. And it's got this National Wealth Fund, which is the successor to the UK Infrastructure Bank, which of course was really targeting those carbon reduction projects, but also, well, I think at the time it was more targeting levelling up as well, whether that still exists. I mean, are these funds, are they really truly crowding in, or are they crowding out private investment?
I think it's probably somewhere in between. I think there's a space for them all, and we'll come on to it. And as we kind of talk a bit more about the breadth of the asset class, there's something for everyone within the space. So I don't think it's a matter of crowding out or crowding in, but it's finding the right investments for those types of investors.
Yeah. I mean, things, as you say, have been changing a lot. I mean, are we seeing any cooling in investor sentiment given the recent interest rates and inflation trends?
I guess to give a pretty legal answer, yes and no.
Fair enough.
I think it's a bit nuanced. And I think because we do talk about the breadth of the sector, the global nature of it, and even kind of within the UK, there are some areas that are naturally much hotter than others. And one of the key markers of infrastructure, and you said it kind of right at the outset, has always been long-term, stable, inflation-linked returns, making it arguably much more resilient as an asset class. I think we've seen that proof of concept certainly tested in slightly more challenged markets that we've seen over the past couple of years. It's resilient, it's not immune. But I think it is reasonable to say that capital deployment slowed. Valuations do still remain under pressure, and fundraising has been quite challenging in this market.
Yeah. So what about the profile of investors? I mean, that's changed with, I imagine, the whole of the asset class. I mean, who or what are the new players in this market?
I think the profile of infrastructure investors changing has been one of the biggest changes that I've seen over the last decade. You know, if you look back 10 years ago, and again, you sort of said it at the outset, it was dominated by specialist infrastructure funds, some pension funds, some institutional money. But now we see it kind of playing much more broadly into these kind of multi-asset managers, these global managers. They've got multiple infrastructure strategies. Often, you know, they're looking at core, so traditional infrastructure, but also value-add infrastructure that is a bit more private equity-like. Insurance companies are part of the investment story, and we're now sort of seeing sovereign wealth funds moving increasingly into infrastructure investing. But actually, interestingly, with those types of investors, they're moving not just from what we have seen previously as passive investors to much more active investors.
So what do you mean? What do you mean by that? Explain what you mean by passive versus active.
Yeah, so we've seen, you know, some of the sovereign wealth funds, some of the institutional money, we might have even seen in infrastructure 10 years ago, but I might not have come across them in my M&A practice because they sort of sat above the capital structure that was investing into the asset. But actually now they're dropping down and they are having governance rights. They are having controls. They are having vetoes over these businesses. They are sitting alongside either specialist infrastructure managers or these global multi-asset managers. You know, the obvious example are the likes of GIC.
And the reason for that is that they feel that they want to take a more of an active interest. Why? Why is that?
Well, I think that they've probably done it across multiple asset strategies, but I think with infrastructure, you know, they are very experienced in it. They have watched, they have, you know, learned over the past 10 years. They have, you know, they might have even had kind of what we see as behind the scenes controls previously. And actually now they've kind of, you know, they've got the experience, they've got the confidence, they've got the sentiment within the sector to now kind of have active roles. I think also, you know, importantly, their teams have grown, so they have the ability to actively manage these investments. So, you know, lots of Canadian pension funds now have offices, certainly in London, across Europe. So they have people on the ground that can manage their European investments, whereas before they may have just been largely based in Canada.
Yeah. I mean, I'm always intrigued, Charlotte. I mean, I've been to Canada recently, and you get a feeling that there is a welcoming by politicians, by the public in many cases, you know, of the concept of private investment, which is in stark contrast in many ways to what we see in the UK, where perhaps on the back of the PFI. It's a tarnished brand, so to speak. Are there lessons from around the world that can help the UK to strike the right balance between attracting this vital private investment and delivering those really necessary and demanded better outcomes for the public?
Yes, I think for exactly the reasons that you set out, right, and thinking about where it's been done well, countries like Canada and Australia have shown that where you've got kind of stable policy, robust and independent regulation, clear procurement policies, that clarity has meant there's a kind of welcoming of that private role into that space.
That's a consistent policy, the clear policy that really kind of makes these kind of investments work.
Yeah, they do. And I think, private capital can also play quite an important part around this discussion, because if you look at some of those profiles of the investors that we were talking about, the global asset managers, they are, as I said, global in nature. So they are part of the dialogue. They understand those trends in those sorts of countries. They've got plenty of investments in them. And so they know what's worked really, really well. And they can, I think, really sort of help build our policy around this.
We'll talk a bit more about what's driving this breadth of interest, but let's talk a bit about you first, Charlotte. You specialise, as it says in your bio, advising private equity and infrastructure funds on complex domestic and cross-border M&A, often involving highly regulated transactions, as I said at the top. Translate that for us then, Charlotte. What does the average day or week see you getting up to there at Clifford Chance?
Well, I've been doing this now for 15 years, and I think I'm probably as fascinated, if not more, today than I ever have been. And I think one of the fundamental reasons for that is that there isn't a typical day or a typical week. It's all incredibly varied. I'm not doing podcasts every day.
Can't believe that.
Every transaction is different. What are the value drivers? What's the investment thesis? Who's the type of client? What are the different types of clients coming into this? Where's the asset based? What's public policy driving these decisions is all changing, which is what's made it really exciting. But I guess, more generally, I spend a huge amount of my week probably talking to clients, whether it's about a particular transaction, they're thinking about structuring something, they're thinking about their pipeline, where they might be looking to invest. And of course, I have the great privilege day to day, week in, week out of working with some fantastic colleagues, teaching them, learning from them, developing, deals with them. And then more broadly, of course, spend a huge amount of time within the industry. So speaking to investment banks, speaking to accountants, what are they seeing? What are their challenges? What's working well? What are the themes that they're seeing in deals? And are they aligning with what we're seeing on the legal side?
Yeah. Well, pleased to hear that, in terms of all the people you talk to, Charlotte, that this is a highlight for you. Anyway.
What's a great start to the week.
Exactly. Well, for all the sectors you could have worked on, what attracted you to infrastructure?
I think quite honestly, I'm probably quite nosy. So it's intrigue about the asset. And I think the very kind of real nature of infrastructure, you can see an airport or you can understand what a gas pipeline might do. And now, I'm totally fascinated by data centers and how they all operate. So really kind of getting under the hood and understanding how businesses work. I have the privilege of being able to speak with management teams as well. They sort of provide context to what we're seeing kind of on the contractual side. And I guess, of course, our clients, they are really some of the brightest people that I have ever met. And it is a real privilege to work with them. They keep me on my toes, but it has been a joy.
Well, what makes a good deal work for you then? What are the kind of what's the ingredients of a good deal when it comes to structuring some investment in infrastructure?
I think for me, collaboration between our teams. So involvement in a transaction, we're often involved towards the end of a deal for a client. So they have been, they've spent certainly weeks, if not months, years. In one case, I had a client that was looking at an asset for 11 years. And they've been, thinking about them and considering those investments. And then we get to kind of come along right as they're kind of finessing all of that structuring. What will it look like? How long will they be holding for? What investors are they investing alongside? To develop those assets, sometimes to divest them, sometimes to do something totally different within the business. And that is a real privilege to work alongside those clients in that. And I think sort of coupled with that, I have to give credit to a brilliant team. Everyone works incredibly long hours, and there's no greater sense of privilege, I don't think, than seeing them come together with us all to deliver these exceptional outcomes for our clients.
But Charlotte, you are the leader of the team, and you were named in Legal Week's 40 Under 40, the rising stars of private equity. What makes you good at doing what you do?
Well, I have to say, I feel incredibly fortunate to do the job that I do, to work where I work and to work for the clients that I do. And for me, any achievement or accolade that I have had the benefit of receiving really is one for the team and the incredible platform. I've achieved more than I could have ever done. And that really is thanks to Clifford Chance. I think what makes a good lawyer, today, we have to be incredibly commercial. We have to be able to connect the dots. There's increasing legal complexity, investor expectations, value drivers, how we execute a deal. And it's understanding all of that and what motivates the stakeholders, being all over all of that detail, but never losing sight of the bigger picture.
So just not just a question of being hard as nails and a tough negotiator then?
No, I'm tough, but I'm fair.
Oh, right. Okay, fair enough. Well, I imagine you have a pretty full-on workload. What do you do to depressurise from the world of law and infrastructure deals?
Honestly and quite simply, spending time with my children. I think for us all, we have to be able to find some balance and joy outside of work in order to be the best that we can be in our jobs. For me, that's my children. Yeah.
Have you got many?
2.
Would you advise them to go into law?
Good question. I would advise them to go into an area that brings them interest, intrigue, fascination, joy, working with people that they enjoy working with. So if that's law, fantastic. If it's not, then they'll find their own path.
They're quite young now, are they?
10 and 6.
So yeah, plenty of time to work that out. Anyway, back to infrastructure. As I say, it now attracts capital from many, many sources. What's driving that breadth of interest?
I guess it's really touching on a few of the themes that we've touched on before. It's stability, scale, relevance. What's the government's focus? As we said, it's long-term, inflation-linked cash flows. That's incredibly appealing to sovereign wealth funds, to family offices, to global asset managers. All of whom are looking for these dependable incomes, tangible assets. And I think when you take that and you cast it against broader macro uncertainty and what we've seen happening into the public markets, from a financial perspective, it is, certainly compelling. But actually, alongside that, the diversification of the asset class, across some of the things we've talked about, digitalisation, decarbonisation, social housing, there's really something for everyone. And it's not just about financial returns. People want to be part of that broader story, whether it's around ESG, digital inclusion, national security stories. So it's as much about strategic positioning and impact as it is about the financial confidence in the asset class.
I mean, does it make for more complex deal making? Because all these different sectors, they're all interrelated. So energy is related to data centers, transport and housing. They're all very intertwined. Does it make deals more complex?
Yes, of course. But it makes them certainly kind of more interesting. And it's not just about some of the themes that you've touched on. And actually, that's a great one that you've touched on around data centers. As I said, it's kind of a real spotlight asset at the moment, but how you're getting power into those data centers, how the cooling works, all of that is a really significant consideration when you're doing the deal. So that's kind of how it all works in terms of kind of getting the assets together. But actually, kind of when you're thinking about different types of capital sources, those types of different investors all have different investment theses and different investment profiles, how long they want to invest for, what their risk appetite is, how they interact with governments, when they might want to kind of recycle their capital. And so that alignment can be quite difficult in a transaction, and thinking, particularly where you've got consortium members, how do you try and kind of align all of those, not just for day one of the transaction, but future-proofing it much more generally. So I think one thing that we're seeing around deal doing today and navigating the complexity is you have to build a capital structure that's diversified, coherent and relatively flexible to be able to deal with, is it a macro shock or is it just simply kind of changes investors, developments within that particular asset? So it is more complex.
Yeah. Well, let's talk a bit about the UK's approach to investment in infrastructure in terms of its growth and policy. The pipeline is this vast 725 billion, and the private sector is very much in there to provide more than half. I mean, is it realistic? Has the government done enough to establish the clear and consistent policies that are needed to secure the confidence that will underpin the required investment?
I think it's an interesting question. I'm not sure it's totally clear whether they have done enough. I think we've spoken quite a bit about capital availability. It's now kind of looking at investability. We need that clear policy frameworks, predictable regulation and confidence. I think in the UK there has been, they've done some things, incredibly well that have been consistent. There has been, shifting energy policies, delayed planning, changing in some sort of regulatory sectors like water and energy networks, and all that can sort of undermine confidence. And I think, we slightly kind of run the risk in this topic of moving into political commentary because governments need to create stable investment profiles, far beyond their term in government. We have to look beyond their political agendas, and not sure that has always been the case in recent times.
But are you feeling anything from, for instance, the Conservatives and Reform's rejection of net zero, for instance? That presumably does it have an impact on the appetite for investing in those kind of long-term projects?
I think because of the nature of how long infrastructure investments are, investors will say, no, actually, they kind of look beyond changing in governments, and you have to kind of look to the long-term trends and where it's trending. And I think, net zero is something that's here to stay, notwithstanding kind of the rhetoric that you're hearing around Reform and Conservatives. And, we've all seen plenty of political parties come out, make statements, and then actually kind of when they're in government or in opposition, the story isn't quite as simple as what they've set out. So it becomes part of a broader debate, and I think it probably feeds into investor confidence and sentiment. Yeah. Do I think it's changing the market? Not so much at the moment.
Right. But we are seeing the reality. For instance, in the US, where IRA, the Inflation Reduction Act, and the sustainable projects or the green projects that was delivering are being cut back. I mean, Trump's drawing a line underneath wind power, etc. That must have an impact on what's happening in the UK.
I think there's a difference between what we're seeing happening nationally and what we're seeing happening globally. And so I think it's just, is there a refocusing into different geographies? Absolutely. We have seen kind of changes in the US, but is the long-term global trend changing? I'm not sure that's the case, but yeah, of course. But I think there is nuance and diversification to where you see geographical investments anyway. And of course, kind of Trump is very much feeding into that.
Well, there is lots of public money promised in the UK, and we talked about the new National Wealth Fund. Can we really... we talked about whether or not we have the policy consistency and clarity required to attract those global funds. Can we really ever overcome that political tension between cheap public borrowing and faster private returns?
Yeah, I think in a way we have to. If we're really going to save the infrastructure funding gap, we can't do it solely by public borrowing. And in fact, kind of we've not seen any government able to do it. I think there is a narrative around there being an inherent tension between, the public or voters versus kind of investors. And I think there's a huge amount of work that's been done to dispel that. And, by and large, it has done, but there are still narratives around it. I think, much of the electorate know that the public funding isn't just going to get there, but they do want accountability and transparency. They want to see a clear pipeline. They want to see consistent structures. Things are delivered on time, on budget, within the policies that the government has set out. So if we can get that right, then yes, I think it dispels the tension.
But that comes down to reconciling this kind of this need for greater investor returns with this lower costs and better outcomes for the end users. And it's when you look at it in those terms, it is often a kind of an unsquarable circle.
I think you're kind of looking at them as being mutually exclusive in that context, and I'm not sure that's quite right, actually. I think it's much more nuanced than that. I think if you're looking at kind of what private investors want and what the public want, they do want alignment in terms of service, delivery, operations within a contemplated budget. And projects need to be well structured, well thought out. We've seen kind of that, I think, probably work quite well in the renewable space. You know, appetite remains high, but we're seeing ultimate costs for end users fall, which is where we want to be, right? And so that's been driven by scale, stability and clarity. I think you can achieve it, but the risk becomes where the pipeline isn't identifiable, the risks aren't identifiable, and that's where sentiment and confusion comes.
Well, we mentioned the phrase PFI, Private Finance Initiative, earlier on. I mean, that has clearly made political leaders more risk averse when it comes to private investment in public assets, because it's politically it's created such a toxicity, which politicians tend to try to avoid. I mean, is there scope, bearing in mind that there are successful models around the world that are using this kind of investment model, is there scope for a next generation PFI in your mind?
Yeah, I think in a way there has to be. I think there is caution, there is apprehension. We're mindful of the historic story and we can take learnings from that, but we have to kind of move forward. And I think the conversation and those sorts of models has to evolve much more around maturing how there is risk sharing, how there is allocation, how there is an alignment of incentives, how there's deliverability, timelines, all of those things that we've been talking about. That clarity has to be much better. But if we can achieve that, then yes, I do think we can achieve better, private investments, private public investments.
Yeah. I suppose there's also a reality that, or understanding required that, whether it's the public or the politician, understanding that infrastructure, it costs money to maintain, whether it's water or whether it's highways or whether it's railways or whether it's energy. It costs money, and you can only pay for it either through taxation or through consumer charges, and that's the reality of it. But getting that message across, do you think do you think the industry is working hard enough to get that message across?
Yeah, that's a good question. I'm not sure the responsibility necessarily kind of falls solely on the industry. I think it's partly where we don't have clarity and where the industry feels that it has to kind of navigate some really kind of quite complex legislation and kind of work through that. It doesn't lend itself to giving that clarity and that confidence to the public. So I think where we can simplify from the public side what investors need to do to achieve that, I think it kind of all adds to that narrative. I don't think it's one party or the other's kind of responsibility to deal with that.
Yeah. I mean, there was a time when everyone in the investment market was talking about ESG and decarbonising and requirements, and really kind of those were the shapers of deals. Is that still the case? That those elements are really shaping deals around the world? I think
it's moved beyond that. So ESG considerations, decarbonisation considerations, they now, they're highly relevant for infrastructure, kind of given the nature of the asset class, but actually it's far beyond that. And they're an integral part now of any investment on any deal. I think it's not just how they kind of shape all assets, but in fact, talking about some of the trends and some of the hot assets, they are very much within that kind of ESG type of asset. So electrification of transport, how that's going to work. There's been, a digital explosion on all types of assets that we've seen, whether they're kind of in the digital tech, infrastructure tech world, or actually they're, a regulated utility. Tech is still relevant to them. ESG is still relevant to them. So, I think they flow through all parts of the transaction now because of how intrinsic they are to our conversation. Yeah.
Well, just to wrap up, are there some sort of big saviours charging over the horizon, whether it's global managers like KKR or BlackRock that are charging over the horizon to really be the catalysts for UK infrastructure renewal?
I don't know if there's saviours. I don't know if saviour is what is needed. I think it's collaboration. They're very relevant. They bring much more than capital. Scale, experience. I think I talked a little bit about it earlier around kind of their global insights and perspectives from different sectors, where we're talking about, to use the example you used previously around data centers and power, they have experience within those funds of both those types of assets, and they can bring that experience together. So I think they're not the sole solution, and I'm not sure that's what anyone wants them to be, but for it to be sustainable, we have to have that kind of collaborative approach and really kind of welcome the insights that they have, both from their global and industry expertise.
Yeah. Well, just to finally finish us off, I mean, what are the sectors that offer for you the most compelling opportunities for investors in the next 5 years?
I think we'll still continue to see some of the sectors that we've seen under the spotlight, so energy transition, grid infrastructure, battery storage, flexible generation, digital, fibre, data access, even social now, kind of thinking about housing, hospitals, pharmacies. But I think what's interesting, and maybe we'll have a conversation in 5 years, is that there are great opportunities in incredibly nascent areas, vertical farming, water infrastructure. We haven't even really kind of seen what the emergence of these sectors are going to do. And I said I'm sort of at the end of the deal doing piece, so I don't see it kind of till a little bit later, but there are, some fantastic studies out there going on around what's going to be the biggest areas. And what will keep me interested is to see the growth of those types of assets. So let's check in 5 years.
Well, yeah, and of course, I'm quite interested to know what's going to keep you busy for the next 15 years. I mean, we've not even mentioned AI, of course, which apparently is going to render the legal profession completely obsolete. But I mean, how does the role of infrastructure lawyers, how does that evolve as capital flows continue to grow?
I think we need to be much more... I think we are. I think you need to be agile and you need to be open-minded. We are part of the story around development and innovation. So whether it's advising on those new types of asset classes, developing them, looking at different types of financing instruments, navigating these potential hybrid public-private models, part of our story is kind of looking at the structuring, understanding the risk. How can we translate that into something that is a legal, workable framework for clients or for investors to continue to invest into the sector? So I think it's being open to the fact that the story is evolving.
Of course, AI can never replace that kind of face-to-face people process that you're clearly very, very good at. So Charlotte, thanks so much for joining me today on the podcast. It is a complex, fascinating area, but it's also absolutely vital to the delivery of the UK's infrastructure and growth aspirations. So thanks very much for sharing your thoughts with us today.
Thanks, Ashley.
Great stuff. Look, that's all we've got time for, unfortunately, today. We could chat, I'm sure, with Charlotte for some time to come, but that's all we've got time for today. We've got more in the pipeline from the Infrastructure Podcast, more guests to talk to as we continue to probe the big issues faced across the sector. If you haven't done so already, do check out the Infrastructure Podcast website, www.infrastructure-podcast.com, where you will find background information and all the latest podcasts to listen to and to share. So thanks for joining us. Thanks again to Charlotte. I look forward to seeing you again very soon.